Imagine for just 1 second your financial world turned upside down. And this is not a nightmare, it's what happens and still happening to too many business owners and freelancers moving to Italy, especially those who work with clients abroad and clearly don't know anything about Italian tax rules. We have spent years helping individuals and companies just to avoid exactly this, and today in this video I'll show you how to make sure this will not happen to you. So if you are an expat living in Italy or an Italian professional with an Italian VAT number, Partita IVA, what we are about to share could save you thousands, even tens of thousands of euros. We're deep diving into 3 biggest tax mistakes people still make on Italian Partita IVA, and they make it when they have clients outside of Italy. So let's start with the mistake number 1. They misunderstand their reverse charge mechanism. This is a big one. Many people think that if they have, as long as they have the Italian Partita IVA number and they invoice a client outside of Italy, especially within the European Union, they automatically skip the VAT. They think, no VAT, easy. But this is not that simple. The reverse charge rule is designed to shift the responsibility for paying the VAT, the IVA, from the seller to the buyer, and specifically works within B2B, business-to-business relationships, transactions within the European Union. And this means that if the seller is in Italy, you issue an invoice without charging the Italian VAT, but you must apply the reverse charge rules in the invoice, in the document. Let's meet Sofia. Okay, Sofia is a freelancer. She's a graphic designer living in Milan. She has an Italian Partita IVA under the standard tax regime. She gets a fantastic opportunity to design a new branding identity for a German software company, so a UA client. The total value of the project is, 5,000, okay? Now, Sofia, knowing that she's working with a UA client, thinks, great, I don't have to charge the VAT. So she makes an invoice to the, let's say, Tech Innovation for 5,000 with a note saying no VAT applicable on the Article 7 TER Presidential Decree 633 of 1972. And she feels confident, no VAT applied. But however, here's where the mistake often happens. For Sofia, in this specific case, to correctly apply the reverse charge mechanism, she needs to do a couple of things. Number 1, she must be registered with the VIES system. VIES system. This system, basically, it's a registry that stands for VAT Information Exchange System. Is a big EU database. It verifies if both the seller and the buyer or the client are registered for cross-border VAT transactions within the European Union. So if Sofia is not VIES registered, she cannot apply for the reverse charge. She would be obligated to charge the Italian VAT to the German company. And following from that, she must submit an intrastat declaration. And this declaration, or fiscal obligation if you want, reports her cross-border services within the European Union. It's a very important obligation that confirms the transaction for tax authorities in both Italy and Germany. If Sofia, for whatever reason, forgets to register with the VS, or for whatever reason, again, she does not submit the intrastat declaration at a certain date, she is in trouble. Let's say that she did not register for the VS, so the Italian tax authorities would see her invoice and say, wait, you should have charged 22% Italian VAT on that 5,000. And this is an additional, 1,100 in VAT that Sofia now owes to the Italian tax authorities. And this is not just the VAT. There are penalties for not having applied the VAT correctly. And they can change from 90% to 180% for the VAT uncollected. So for that 1,100, Sofia could face a simple penalty up to 1,980, bringing her total unexpected bill to over 3,000. And all of this because of simple but critical rule oversight. This is why understanding the VS registration intrastat submission is not negotiable for anyone with Italian Partita IVA working with the foreign clients. Let's jump to the question or mistake number 2, the withholding tax for no EU citizens. I know what you may be thinking right now. When you work with clients outside European Union, let's say from the US, Australia, China, things can get very, very complicated, especially with something called withholding tax. Many individuals and business owners completely forget about this, assuming that because the client is outside the EU, Italian tax rules do not apply to their payments. This is a very dangerous assumption. The withholding tax, or as we like to call it, ritenuta d'acconto in Italian, it's like an advance payment of income tax that the client, in some cases, is legally required to withhold from your payment and pay directly to their own tax authorities. It's like a withholding tax. This depends on dual taxation treaties between Italy and the client's country and specific nature of the services provided. But let's consider Marco. Marco is an IT consultant based in Rome. He has an Italian Partita IVA under the standard regime. Remember, we're not talking about the regime forfettario, the 5% or 15% rate. He has a very nice business consulting firm with a tech startup in, let's say, New York, US, called Solutions INC. And they agree on a fee of 10,000, lump sum, one-off. Marco makes the invoice for 10,000 without the VAT, exempt from Article 7, and he got paid 10,000. Marco is happy, transaction is done, work is done. However, here's the hidden trap. The United States, like many other countries out there, has rules regarding withholding tax for services offered by foreign entities or for individuals. For certain alternatives, especially if they are deemed to be performed within the United States or if there is no applicable tax-free exemption, a percentage of the payment might be withheld. In this scenario with Marco, let's assume for a moment that there is no specific tax-free provision about this specific case that exempt this type of services from a US withholding tax, or Marco, to his client, failed to follow the procedures to claim an exemption. The client might be legally required to withhold, let's say, 10 or 30% of Marco's payment and remit it to the US IRS. So instead of receiving the 10,000 gross they agreed on, Marco should have only received 10,000 and the 3,000 collected by the IRS. Now, Marco has a big problem. He received the full 10,000. So the US authorities might later come with the US client for not withholding the tax due. And when Marco declares his income in Italy, he declares the 10,000. What he might not know is that he then needs to account for the potential withholding tax and potentially claim a foreign tax credit in the C section to avoid a dual taxation, of course, if the treaty allows that. If he does not understand these rules, and that works for him and for the client, or basically is not aware of that, he could end up in a situation where he has to pay Italian taxes on one hand for the full 10,000 and potentially face issues in the US tax authorities for US client. So the key takeaway here is for the non-EU clients, always, and we mean always, investigate if there is any withholding tax implications for your clients. And this often involves looking at the dual taxation agreement or treaties between Italy and that country. I know it's complex, it's not easy, but ignoring it can be incredibly costly. Do not forget about the mistake number 3, not having proper documents. This might sound very obvious to you, but this is one of the most common reasons for problems. When Italian tax authorities audit your business for whatever reason, especially with international transactions, they want to see everything. They want to see everything clear, detailed, and compliant. So this includes proper invoice. And in this case, we're talking about clearly state for the services, the client's details, your Partita IVA, the correct VAT treatment, you know what I'm talking about. And for you transactions, it means especially mentioning the reverse charge. They want to see proof of the client residency, of the business status, the business registration. For example, the registration to the VS if they are within European Union, and for the non-EU clients, documents or documentary evidence confirming their business status and locations. They want to see possibly contracts and agreements, like a written agreement outlining the services, the payment terms, responsibilities, especially for services with complex international tax implications. And the last one, probably the most important one, payment records. Bank statements showing the receipt of funds from the international clients actually paid to you. Let's circle back to the first example, our graphic designer. Imagine she did everything else right. She registered with the VS, she filed the Intrastat in time, but her invoices were sloppy. They did not clearly state the Article 7 for reverse charge, and she had no proof that this client has a legitimate business. So during an audit, a documentary audit based, the Italian tax agency might see a 5,000 invoice without VAT and immediately red flag it. So this lady, Sofia, cannot quickly and clearly provide all the necessary supporting documentation because she doesn't have any. So they might assume that she incorrectly applied the VAT exemption. And this could trigger an assessment where they demand, and yes, I'm saying demand, the 22% VAT plus penalties simply because she cannot prove she did it right, even if she did. So the burden of the proof is always on you. And for Marco, our IT consultant, precise documentation of his contract with a US client, including, email exchange, discussions about tax responsibilities, for example, or any attempts to obtain withholding tax exemptions, will be crucial and winning if questions arise from either the Italian side or the US tax authorities. In the world of international taxation, assumptions are your worst enemy. The rules are conflicting and complicated, I know. They are evolving and they demand your fully undivided attention. What works for a local client in Italy will not necessarily work for a client in Germany or in the United States or anywhere else in the world. This is why we're here. If you're a freelancer, a business owner, or an expat in Italy dealing with international clients, don't leave your financial future to chance. The cost of a mistake far outweighs the investment in getting things right from the start.
At Studio Rigo, we provide world-class tax and financial guidance for expats and international professionals in Italy. We don't just help you stay compliant. We craft strategic tax solutions tailored to high-level individuals who demand precision and expertise. If you are serious about optimizing your tax position, visit our website or connect with us on social media. We work with those who value excellence, and we look forward to assisting you. Thank you for watching. See you in the next video.